Dun, dun, dun. Welcome back, ladies and gentlemen, for the fourth YouTube video of the day. I had absolutely no intentions of making a video at 9:30 p.m. UK time. However, we've got to cover what has just dropped in regards to the SEC essentially going after staking, proof of stake cryptos potentially, in the form of Charges Kraken. This is a press release from the US Securities and Exchange Commission. Just a bit of context to this. We can see the cryptocurrency market is selling off. We've been largely expecting a pullback. I actually think that there's a lot of FUD around this, and that if this was as serious as people are making it out to be, and it is serious, don't let me not underplay that, but in terms of as detrimental to the cryptocurrency market and its succession, then you would have already seen that play out in the price. And I think there's lots of people out there that have a massive vested interest because they, basically didn't accumulate any cryptos down here, in hoping and wanting for lower prices. And I think there's going to be a lot of downdraft that's going to probably come on the back end of all this. We've already said that it's going to be a very volatile time period going into the CPI on Tuesday, and this is really going to amplify it. In my opinion, whatever dip this brings, and we've been waiting for a dip. We actually did a video earlier where we said, look, I'm not sure, we don't want to long here. We don't want to buy any cryptos here because we're at this kind of dangerous grinding higher, and you actually could see that the sell or the volume was on the sell side with this sort of grinding structure. There's a lot more volume on the top end of whether it was a rising wedge or a channel, than there was the bottom, which shows that someone's been distributing. But I think that big players don't wait until the news breaks to sell. There's a lot of retail, low liquidity sort of pressure that's taking place here on sort of scarcity. So let's get into it, guys. We covered an article earlier, or we covered a tweet earlier from Brian Armstrong. We're hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. I hope that's not the case, as I believe it would be terrible a path for the US if that's allowed to happen. And we actually covered this. We'll leave a link to our earlier video. This literally just released, guys, and we're getting into a number of related tweets. This is Gary Gensler talking about it, which we'll probably play. But I'm not sure why they're going after staking like this. So this was the press release from the SEC. Kraken to discontinue unregistered offer and sale of crypto asset staking as a service program and pay $30 million to settle SEC charges. This is for immediate release. I'll go ahead and remove my face because you don't need it there. Washington, D.C. on February the 9th, which is today. The Securities and Exchange Commission today charged Payward Venture Inc. and Payward Trading Limited, both commonly known as Kraken, with failing to register the offer and sale of their crypto asset staking as a service program, whereby investors transfer assets to Kraken for staking in exchange for advertised annual investment returns as much as 21%. To settle the SEC's charge, the two Kraken entities agreed to immediately cease offering or selling securities through crypto asset staking services or staking programs and pay $30 million in disgorgement, prejudgment interest, and civil penalties. This is crazy, guys, that this is actually happening. Let me just see if I can zoom in on this. There we go. Tired eyes. So according to the SEC's complaint, since 2019, Kraken has offered and sold its crypto asset staking service to general public, whereby Kraken pools certain crypto assets transferred by investors and stakes them on behalf of those investors. Staking is a process in which investors lock up or stake their crypto tokens with a blockchain validator with the goal of being rewarded with new tokens when their staked crypto tokens become part of the process of validating data for blockchains. When investors provide tokens to staking as a service provider, they lose control of those tokens and take on risk associated with those platforms. With very little protection, the complaint alleges that Kraken touts that its staking investment program offers an easy-to-use platform and benefits that derive from Kraken's efforts on behalf of investors, including Kraken's strategies to obtain regular investment returns and payouts. Whether it's through staking as a service, lending, or other means, crypto intermediaries, when offering investment contracts in exchange for investors' tokens, need to provide a proper disclosure and safeguard requires by our security laws, said the SEC chair Gensler. Today's action should make clear to the marketplace that staking as a service provider must register and provide full, fair, and truthful disclosures and investor protection. So this actually isn't as bad as it seems. So basically what they're saying is that Kraken have not registered to do this, essentially, and they've not been upfront and transparent. And I think there's going to be other companies that are going to come under scrutiny. I think the SEC is on a warpath after FTX. In case after case, we've seen the consequences when individuals and businesses tout and offer crypto investment outside of protection provided by the federal securities laws. Investors lack the disclosures they deserve and are harmed when they don't receive them. Director of the SEC, said by the director of the SEC Division of Enforcement. Today, we take another step in protecting retail investors by shutting down this unregistered crypto staking program, through which Kraken not only offers investors outsized returns untethered to any economic reality, but also retain the right to pay them no return at all. All the while, it provides them zero insight into, among other things, its financial conditions and whether it even had the means of paying the market returns in the first place. In addition to ceasing the staking program and the monetary relief, Payward Ventures Incorporated and Payward Trading Limited, without attempting or denying the allegations in the SEC complaint, consented to the entry of a final judgment subject to court approval, would permanently enjoin each of them from violating Section 5 of the Securities Acts, so on and so forth. The SEC investigation was conducted. So this is absolutely breaking news, guys. And it's kind of what Brian Armstrong's talking about. My gut feeling is this is not as bad as people are making it out to be, and that it's very likely that actually this is probably a shakeout. Bitcoin has been long due a pullback, and they're saying that they're charging Kraken for basically not being transparent. If you look at the volume here, right, this is something that I did with my Patreons. Not that now is a time to be shilling anything, but it's really a lot of value you get in the Patreon. Look at where the bulk of the volume is. Look at where this volume is, guys. So obviously you had this big volume spike here. Someone has been dipping and dumping on this market. Look at this big wick here. Sell pressure. Sell. I did this with my Patrons the other day. Look at this volume. Now this, of course, is on the news, but you can see that actually, and if you look at where your volume is on these points where it's gone up, it's low volume. So the conviction's been on the upside. This has been grinding higher. This is why we've been so uneasy. We had no idea this news was coming, and this is why we've actually, said that we're not looking to put any more money in just yet, really, or any large sums of money in just yet, other than what we accumulated at the start of the year. Because of this reason exactly. It's something wasn't right about this structure technically. And of course, this is obviously transpired. So update, additional actions are confirmed from the SEC. Source, exchanges and stablecoin issuers will be getting Wells notices in the coming days and weeks. Specifically mentioned Circle and Paxos. Isn't that interesting? Stablecoin issuers, Paxos is being investigated by New York regulators. This is breaking. The scope of crypto related investigations is not yet clear. Major crackdown coming, ladies and gentlemen. This space was always going to get regulated. I think regulation is what's going to push it, to the next sort of level of adoption. I just want to make this clear, though, that we've outlined that this has always been on the cards, and we're actually looking for a pullback for what we think is going to be a broader head and shoulders that sets up. So we're not actually worried about this, believe it or not, even though this is substantial news and is damaging to the crypto space as a whole. There was some more news. This is, of course, official. Today, the SEC charged Kraken for the unregistered offering and sale of securities through its staking as a service program. Whether it's through staking as a service, lending, or other means, crypto intermediaries must provide proper disclosure and safeguard requirements by our laws. So it's kind of basically just saying that, you know, they weren't upfront and transparent. I'm going to go ahead and play this, and then I'm going to leave you guys to it.
What does stake
Let's just make sure the volume's turned up on that, guys.
have to do with our securities laws? That's S-T-A-K-E, not S-T-E-A-K.
Oh my goodness.
In the crypto market...
Did I just hear that intro music correctly? Life is a game, guys. Honestly. Damn.
markets, there are various ways to validate data stored on crypto ledgers called blockchains. And one of these ways is called staking. Investors lock up their tokens in escrow and help validate the next block of data. Some stakers are then rewarded with new tokens. Staking, though, can be complicated and time-consuming and can take big upfront commitments of tokens. There's also the risk that you won't get new tokens even if you stake. Rewards, APY, or staking them. Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share? Are the underlying crypto protocols genuinely creating value on your investment? Or are they just new tokens that dilute the value of ones you already have? Remember, if you have a stake, that's S-T-E-A-K, if you have a stake meant for...
Nobody thinks you're talking about the food stake, mate. I can't believe that. I actually feel insulted. 33rd chair. Oh, I'm going to shut up, man, and play the rest of the clip.
Two and cut it into 3 pieces, it's still the same amount of stake. Unfortunately, because these staking as a service providers generally are not providing proper disclosures, there's currently no reliable way as an investor to know the answers to these important investment questions. Plus, when you sign on the dotted line or accept the terms of service, you are generally agreeing that placing your tokens with these providers may mean transferring your ownership to them. There's an expression in crypto, not your keys, not your crypto. You see, you're basically an investor in their platform. If it goes under, and we've seen plenty of that recently, you end up in line in the bankruptcy court. That's why it's so important that these companies and platforms comply with the securities law. After all, the securities laws, regardless of what you think of stake or staking, they're good for investors.
I'm going to smash my monitor up in a minute. Nobody thinks you're talking about stake, mate. But actually what he said there and what we read, they're essentially saying that some of these companies haven't been transparent with offering these services, and they need to do that and register and come under their jurisdiction in order to offer it. And until they do that, we still aren't sure. Here's the thing, guys. We've got to be birthed into this sort of regulation or regulatory world, largely. So he has a point, Gensler, in regards to that many of these companies actually aren't upfront, and you do give over your crypto to them, and if they go bankrupt, they'll keep it. And we've seen this. Look at what happened with Gemini's Genesis. And this is the thing with little, or I don't want to say little people, because the Winklevoss twins are probably about a foot taller than I am. But this is the thing with what happened with them, right? and their Genesis trading that they gave their yield program through, it wasn't transparent at all. And actually, by them complaining and kicking up a fuss because they lost out, this is what brings regulators like Gary Gensler in. This is not all bad. It's being deemed as bad right now. Personally, I'm going to be buying the dip from this. So whoever gets shaken out, I'll be buying your coins up. And I don't think this is going to take us to new lows. You think that this is going to be on the same scale as FTX? You know, and actually we've expected this. So just take a chill pill. You've been following my daily show. You know, certainly if you remember my Patreon, you knew that a pullback was coming. I think on the face of it, it looks pretty damn bad. But actually, take a step back, look at it. Markets were due a pullback anyway. There was distribution taking place right at this neckline. It's not just Bitcoin. I'm going to take my draw off here because there's lots of altcoins right at this neckline. Right at, yeah, Kraken's got, but still, right at this neckline. Right at this neckline, you know, well, due a pullback, by the way, guys. So just take a big, deep breath. It's not the end of the world. In actual fact, there could be some bullish connotations to this. I think them going after exchanges for offering services that aren't transparent, offering staking when it might not be staking is how the rewards are generated, actually is not that much of a bad thing. Certainly for the adoption of the crypto system, we have to go through this. Certainly in the US, do you really think the US are going to allow crypto to exist without regulating it? Absolutely not. We heard from BY and Mellon earlier that they think this, you know, digital assets are here to stay. So that's all I've got for you on this video, guys. It is what it is. It's not nice news necessarily. It's the SEC poking their nose into business when many of us are sort of scratching our heads and going, who gave them the power to do that in the first place? But just see it for what it is, guys. You know, and I don't think they're going to ban staking in the US. I think they're just going to look for crypto companies that offer staking to, you know, be to be registered. And what is a Wells notice? A Wells notice is an official notification issued by the regulators to inform individuals or companies to complete investigations where infrastructure have been discovered. It usually takes the form of a letter, which notifies recipients both on the board and nature, so on and so forth. Take a step back. We'll cover this in more detail tomorrow. I just wanted to get the news out there so everybody knows. I think this has been largely blown out of proportion, but we will see. Pullback was always on the cards here. That's why we sort of said in our earlier video, we don't know what to do because we can actually see the market coming off, but we can also see, we expect continuation, even with this news. So take that for what you will. Well, I've got for you in this video, guys. You enjoy the content, like, always appreciate it as a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, guys.